Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar, after Friday's rally, eases slowly away from the supply zone. It's seen at 71.90 to 72.10 after recording an intraday high of 72.03. This week we've got quite a lot of data with the up-and-coming high-level U.S. U.S. China trade talks, which will be looked upon for a possible resolution of disputes between the world's two largest economies and play an essential role in influencing sentiment around the Chinese-proxy Australian dollar. Last week, the Australian Bureau of Statistics, the ABS, released the Australian employment figures, which again rose in December, along with the jobless rate, which was surprisingly fell to a 6.5-year low of 5%. Looking at the technical picture though, the market is still, at this stage, I do expect to reject the 72-cent handle and look back to the immediate target of 71.45, with the objective, which was rejected last week, at 70.75 after posting a low of 80. But overall, I'm still keeping an eye on these technicals and they are somewhat bearish. The US dollar has remained relatively weak and now looking for further test down could see the euro challenge the level of 114.55. Now, I did mention this week has got a lot of data, starting with the FOMC monetary policy update, which is expected to signal a pause in recent tightening cycles, although still remains uncertain to the recent dovish chairman Jerome Powell, as he recently reversed his tone to a more dovish statement. And then on Friday, we have the non-farm pay reports. That should actually trigger further interest in the US dollar as well. So be a little bit conservative for trading this week due to the high risk factors of the data that's looking to come out. If we can break 114.55, then we would see a rise up towards the 115 region to 115.80. However, at this stage, keep an eye on the technicals. They haven't fully broken in terms of the MACD, but the RSI has broken over the midway point, so I'll be keeping a very close watch here. The dollar yen hasn't really traded in terms of breaking down. It's still locked in a 109-110 range and still contained by the 110-20-25 resistance. From a technical approach, though, I am expecting to see further weakness and looking to a down challenge of at least to 108.45.55 as a target this week, with the cap still remaining at 110.20.25. The pound is short in terms of positions as the market squeezes the market positions out. And now, after posting a high of 6 consecutive weeks, has rallied more than 4.5%. Now, I haven't had a view really on the back of this since the squeeze, but if the high of last night of 132.11 or above 132 is some indication the pound has found a near-term top, then let's keep an eye on the structure of this pattern, as we could see a relatively hard fall. Later today, the British Parliament will be voting for the second time on the Brexit agreement. Prime Minister May is expected to lose the vote though, so keep an eye on that if you are trading. The immediate downside target comes in around 130.20 and reassess from there. Looking at gold, market surges on Friday and claims the level of 113 or 1,300, should I say. And the fact is that leaves me neutral for the short term. Nevertheless, the only thing I'm concerned about is we haven't seen any real follow-through from the break of 1,300. As you can see, it was quite a strong level after at least 9 or 10 times attempting, finally broke. The immediate top side comes in around 05 to 09, with the support seen at 97. But as I mentioned, I'm neutral and I'd rather wait and see what the outcome from the Fed, who also other governors have suggested that they might tilt their way towards a flat. So there was expected to see 3 tightenings this year. We could be now looking at 1. And rounding up with oil, we are just holding in there on the neckline at $52 a barrel. However, from a technical point, it doesn't look that convincing in supporting this pattern. And a close under 52 would reassess, as the view market could take it down to about $44 to $46 as a target, as this pattern will be negated if we see a close under 52. While intact, I still hold to $55 a barrel. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new week.